As we head into 2017, U.S. stocks are at near record levels. Many investors are wondering what might keep the market rally going. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins us to talk about some keys to a strong market in 2017. Hey, Mike.
Good morning.
Where should we begin?
Well,
2017, I can't believe it.
That's right. Clean slate. But as you mentioned, we did finish 2016 on a high note, which was great, especially considering where we started off, which was by many measures the worst start to a year in market history. And then we close at a near record high. So
yeah.
Certainly a nice change from 2015, which was a very disappointing year for the market. And it looked like we were on pace for more disappointment for most of last year until we got to the election. And that's when the market really took off.
Yeah.
A lot of that is based on enthusiasm for what might be coming from Washington next year, be it changes to the tax code or fiscal stimulus. No one really knows. But it's that enthusiasm that's driven the market to these new highs. Well, unfortunately, we're going to need more than enthusiasm to keep the market up there. So it'll be important for this coming year to see if we can get a foundation to prop up those high levels. And we'll get some indications as the year unfolds about whether or not we can keep the rally going.
So what's at the top of the list to keep that going?
Well, okay, so there's one item that stands out above all others. Put a star by it, underline it, whatever you want, but corporate earnings are going to be the real key to keeping the rally going. So you know, we've talked on the program many times about how important these quarterly earnings reports are for the market. They're a very good gauge of the health of the individual companies, and if you're making an optimistic report, that can lead to a strong stock price. But if you're coming in short, that can have the opposite effect.
Yeah.
So, you know, 2016, not a very good year for earnings. Not terrible, but not great either. And that was kind of a major contributor to a lot of the uncertainty that we saw last year. But now we've had the market just race ahead. And so it'll be very important for 2017. Can earnings keep pace? Can they catch up? If they can, that's a very positive sign.
Okay.
If they can't, that could lead to some trouble. The good news is that we'll know fairly quickly where we stand. Fourth quarter earnings reports are just right around the corner. We'll have them in the next couple of weeks. And so all eyes will be on that as we start the year to see, are we going to get a little boost to begin 2017, or maybe is it a bit of a speed bump?
And quickly, what else could help? Anything else?
Sure. Earnings will be the key, but there's always things like the Fed. Having them maintain their plan would be good. Erase a lot of the uncertainty we saw last year. Consumer confidence right now is very high. If the consumer stays in the game, very important. And the dollar. The dollar was rising for much of last year. That creates a headwind for a lot of U.S. companies. If it were to stabilize or maybe even drop a little bit, that would be a boost too. So again, we'll see. The earnings will come here very quickly. Some of these other things will unfold as the year goes on, but we'll be keeping an eye on it, and we'll keep you posted.
All right. We know you'll take care of us in 2017.
Absolutely.
Thanks, Mike.